Hi, welcome to this video, Dave, which is all about Forex trading stress. I want to give some simple tips in terms of banishing stress from your trading so you can trade in a relaxed way with total focus and discipline. Now, it's a fact that most losing traders do suffer from trading stress. They constantly want to look at their positions and check the markets. They will make impulsive trades that they know they shouldn't, but they're still going to do them. And also, in many instances, they're going to chop and change their trading strategy. They'll tweak it in the face of the market action, which all those points will basically lead them to lose. Now, if you want to trade without stress, you've got to become patient and go for really high odds trades only. Now, you might think, well, that would be easy. It's not easy at all, actually, because the Forex markets are designed to stress you out. You're genetically programmed not to be patient in the face of the market action. Now, in terms of becoming patient and focusing on high odds trades, I just want to go through some tips on how you do this and why traders find it so hard not to get stressed out by the markets. Now, I've written up some points on a storyboard, so what we're going to do is we're going to go over and take a look at them, go through them in more detail. If you learn and understand them, they're pretty simple to understand. You can trade stress-free, better focus, total discipline. You'll be taking better trades and making better profits. Right, let's go and take a look at the tips. Right, let's go through the points that we've written up here and go through them in a little bit of detail. First of all, I've started off with a quote. The quote comes from one of the top traders of all time, Ed Sakota, interviewed in the book Market Wizards, edited by Jack Schwager, one of the classic investment books of all time, interviewed a huge amount of great traders. Okay, I strongly recommend you go and read that book. But in terms of the quote, and it's a famous one, Ed Sakota said, "Win or lose, everybody gets what they want out of the market. Some people seem to like to lose, so they win by losing money." That sounds paradoxical, doesn't it? How can anyone enjoy losing money? There's a huge amount of traders who subconsciously do, and I'll return to why in a moment. But first of all, what I want to go through is the rest of the points here. We live in an era of information overload, and we generally, as humans, have a need to act. We like excitement. Okay, now you'll see online people saying trade from your smartphone. We've all got smartphones, and they tend to focus us, or a lot of people. You see a lot of people just wandering around, maybe going to the station on their smartphone. Okay, they're seeking information. Okay, in terms of Forex markets, you hunt online, massive amount of information, 24-hour news channels, huge amount of analysis, etc. We need to act as humans, as a general rule. We like to act. We do want excitement, okay? That's a dangerous combination in the Forex markets because we want to force profits, okay? Get quick profits. And you'll see online, majority of strategies that are taught tend to be very short term, like trade off a 5-minute chart, 15-minute chart, or whatever. You're not going to make any money doing that at all because you're just trading the market noise. The people who promote these strategies just know, though, that they appeal to human nature. So let's just say we have a need to act. We want to be excited generally as humans. Okay. Now, how much boredom can we take? Now, if you want to be patient in the market, you've got to get used to being bored. Most people can't get used to being bored. And I've put up some research here from Timothy Wilson, who's a renowned psychologist, which comes from his book, Strangers to Ourselves. I strongly recommend you read that if you want to get deep insight into your psychology. Now, he did an experiment. He got some participants to take part. I think it was about 150. All they had to do was do a 15-minute thinking session. No phones, no external stimulus allowed, just alone with their thoughts. Just 15 minutes. The results, 89% said their mind wandered during the session. 50% of participants said they didn't enjoy the experience. I found that really a high number They're only alone for 15 minutes with their thoughts. Okay. Now, next bit is very interesting. Wilson decided to introduce an electric shock impulse. They could give themselves electric shocks to relieve the boredom. How many people did that? 67% take-up rate. Of the people who administered themselves electric shocks, the average was, I think, 4 shocks, and one guy, or could have been a girl, 119 in just 15 minutes. I know it's a mild shock, but a little bit excessive. So they prefer to hurt themselves than be bored. That makes sense. Sakota's quote makes sense, doesn't it? Replace market with thinking sessions and lose with hurt. A lot of traders subconsciously win by losing money. They crave excitement. They crave the thrill of trading. Okay, that's their way of winning. They'll get stressed out, of course. They'll have highs occasionally, mostly lows, but they won't change their behavior. Okay, they want to force profits from the market. They want excitement. They want to act. They're winning in their own way, aren't they? Huge amount of traders I know trade in that way. Okay, now if you want to be a successful Forex trader and basically banish stress, you need to get used to being bored. Okay, so you want to be focused on longer term trading periods and not look at price action. So you shouldn't be sitting at a screen, trading short-term charts, and you shouldn't look at price action too much. As soon as you do, you'll be sucked in emotionally and you make impulsive trades. Anyone who's looked at the screen too much will understand what I mean. Okay, so you should have the bar or the criteria for your trade entry should be very high within your strategy, only taking the really high odds trades. Write down the rules for entry. That will reinforce discipline. Okay, they're the only trades you want to go for. They should be longer term trades. I would suggest as a retail trader, if you're a swing trader, swing trades normally last a couple of days to about a week. Long term trend followers will be focusing on trades for over a week to over a month or even more. Okay, and don't look at price action too much. Look at it once a day. That's all we do. We look at the price action, set our trade entry, stop and target, see if the market does what we hope it will do. Okay, that's it. There's no point in looking at the price. As soon as you look at the price, your emotions come into play, so does stress. George Soros actually made a very good quote on this when he said that if you're trading, you're having excitement and you're having fun, you're probably not making any money. Good trading is boring. It is. Okay. Ray Dalio, probably the most successful hedge fund manager around today. What does he credit with giving him most of his success? Meditation, clearing the mind. Now, a lot of traders who meditate, and I'm not saying you should go and meditate, but when you're trading, you're doing your analysis, getting your trades worked out, etc., you should be in a quiet area with no distractions, not doing it on a smartphone, going to the station or whatever. Next point, understanding the impact of 90-10 reinforces patience. This study has been done on numerous top fund managers and traders, and basically 90% of the traders' profits come from just 10% of their trades. Okay, so what you want to do is get those winners to really be big in the 10% against the 90%, which will probably make you maybe small profits or small losses. That means focusing on longer time frames. Okay, can't do that if you're making small profits. You won't make great profits on your trading account if you're just taking small profits trying to scalp them. Okay, you won't cover the 90% of trades that don't do very much. That study has been done on numerous great traders and successful hedge funds. Okay, so that will reinforce patience on really just focusing on high odds trades. Point number 12, time. Make it work for you. Just don't be in a hurry. Judge your performance over many months or a year, not day to day, week to week. Okay, the 90-10 rule tells you that those 10% of profits come probably in just a month or two maybe, or 3 months of a trading year. Okay, the rest of the time, small profits, small losses. So you don't want to try and force profits from the markets. There's nothing to do as well. Just don't do anything. Time, basically don't be in a hurry. I put patience in a 50k profit. And this is quite interesting, actually. I think it was mentioned in one of my videos. I just showed a chart of a huge long position in the euro. Okay, it was called the City Pain Index. I was saying the euro will probably go down. This was well over a month ago. I think it was about 6 to 8 weeks ago. And a trader that I know, so actually I quite fancy that trade. I'm just going to do it and hold it. Okay, he had a 100k account. He's paid 50k. That's all he did. Put the trade on. As long as the criteria that was supposed to make the trade work doesn't change, he's holding the trade and hopefully gets to his target of 116. But if you look at the euro chart, if you were watching that, or euro USD chart, if you're watching that constantly, you probably panic yourself out the trade. He hasn't done that at all. Stayed away from the price. And just shows you what patience can do. I wish I'd done the trade in the same way as him, actually. But that is the video for today. Get used to being bored. Fill your time up doing something else. Forex markets do not require hard work. If you work too hard, you get stressed out and you'll lose. Right, thanks for watching the video. Take care. Have a good day.